Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited to be with you here this morning as we start the first trading day of the week and, of course, the early days of the new month. So I'm sorry I'm coming in a little bit late this morning. I had some technical issues, but I'm very glad that things were sorted out, and here we are today. So let's run through our daily routine before we kickstart the session, just to confirm that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear without distortion, please let me know in the comment section by typing in hi, and your highs will only give me a positive feedback that we are good to go this morning. So thank you very much, as I look forward to your feedbacks in the comment section. All right. So let's see what we have here. I have a bunch of comments from this. Here I can see Bayonesi DL. Good morning. Good morning to Lampard 45. Thank you very much. Evosak. Good morning to you too. Thank you very much. Hello, Carrie. Good morning to you. Glad to have you around with us. And then I can see NCY09. Good morning to you too. Glad to have you around with us this morning. And it's on this note I welcome you all to yet another promising edition on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective using our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. It's the first day of the week, and this gives you the privilege to drop in any financial assets you want us to look at for this week. And if you have them, let me have them in the comment section, be it commodity, cryptocurrency, currency assets, options, equity, what have you. Let me have them, and trust me, I will incorporate them into our plans for this week. Besides that, I also have a bunch of assets which I already made a plan for this week, and in fact we have interesting and simple trading setup that we will be using to guide our trading decisions for this week. So I encourage you all to stay tuned in so you don't miss out on the valuable ideas we will be deliberating on today. I can see your comment, Evosak, who says is new here. I can see the speaker on the screen. Of course, you can see the speaker because we are not, we don't have the camera plug-in in play. So you can see my screen, right? You can see the chat on the screen. If you can see the chat on the screen and you can hear my voice loud and clear, you are all good and fine. All right, Evosak, please confirm to me you can see that. So with that being said here, for those who are joining us for the first time, let me quickly give you a brief into what we really do here, because I know you will be wondering what are your expectations and what should you be looking at on this platform. Well, as technical traders, we usually gather here every day, coming together as a community and engage in follow-ups and reviews of our current trading positions in preparation of the New York session. The session officially kickstarts 10 a.m. UTC, 11 a.m. West African time, and it is appropriate that you stay tuned in so you don't miss out on the valuable ideas we will be sharing today. And my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information you gather here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business for today, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be affecting the market sentiments today. And based on the asset I have on our watch list for this week, which includes the USOILSPOT, the USTech100, popularly known as the Nasdaq. We're also going to be looking at the GBPUSD, and of course, my favorite asset amongst them all is the XAUUSD, popularly known as the gold spot. So basically, based on this asset we are looking at, we will be focusing on economic features from both the United States and the United Kingdom economic docket. Now, for today, Monday, March 4th, we do not have any high impactful event to look out for. In fact, for the United Kingdom, there are no high impactful event for this week. So we will be including the mid-tier economic feature to have a broader view into what market participants will be looking forward to for this week. Now, for today, Monday, after including the mid-tier economic features, we will be looking at a speech coming up in about 6 hours from now, and that is from Patrick Acker. Patrick Acker is the President and Chief Executive Officer of the 3rd District Federal Reserve Bank at Philadelphia, and is also a voting member of the Federal Reserve FOMC committee, which gives a lot of weight to whatever is going to be saying today. And of course, as technical traders, even the whole of market participant will be looking forward to what it will be saying, as it will be giving us an insight into the Fed's monetary policy stance. It's also going to be giving us an insight into the Fed's the economic outlook, and of course potential future policy actions from the Federal Reserve. Now, the anticipation of a speech can significantly impact market sentiment, as traders and investors will closely analyze his rhetorics for clues about future policy directions. And of course, we all know the dilly-dally in the last 3, 4, 5 weeks in this across the USD market, where we have had situations where interest rate cut was is likely going to be pushed forward into May or June, and then we've had situations where interest rate cut was expected to happen as early as the month of March. However, the less than expected figure from the manufacturing sector in the United States on Friday had thrown a clog in the wheel of the expectation of higher interest rate for an extended period of time. If you remember, if you are with us in this community, about a couple of weeks ago, we saw the CPI data, which came phenomenally high, higher than the expected figure, hereby giving us signs of a stickier inflation, which led into the Federal chairman to buttress that interest rate cut is not going to be coming anytime soon due to the sticky inflationary pressure in the United States. Now, with this latest development, there is a dichotomy amongst market participants on when all the timeline of the Fed's interest rate decisions. So these has thrown in a little bit of uncertainty into the market, and we want to be hearing what the Fed officials are going to be saying, as market participants will be using these to guide their independent decisions. So as a result of this, I would like us to mark out the timing of the speech, which is coming up in about 6 hours from now, so that we can strategically position ourselves for the next move. And as technical traders, we do know that the anticipation of events such like this has a way of influencing the behavior of market participants, which definitely would reflect on the chart as price action. So what we are going to be doing today is to review the current market dynamics, looking out for patterns and structures that can help us strategically position ourselves for the next move. So the first asset we will be taking on, so I can see some couple of comments here. I see FB Kaita says that please look at USTech100. Of course, it's going to be part of our watch list today, so stay tuned in so you don't miss out on that one. What else do we have here? All right, okay, I can see I've said okay, NCY09, we've talked about that. Okay, all right, so let's move on to the first asset on our watch list for today. So the next asset we are going to be looking at today is going to be the USOILSPOT. Now, on the USOILSPOT, for those of you who were with us during the previous week, we had a phenomenal week as we capitalized on that bullish momentum throughout the course of last week, breaking out of that neckline area we identified on the daily time frame to give us over 500 to 600 pips from multiple buy entries throughout the last week. And for those of us who are part of this profitable journey, well done and kudos to you, as we will be looking at what to look out for as we head into the new week. Now, before we go into the technical details, let's have a better understanding of what has actually supported the ascent of the US oil prices. Now, oil prices have gone up after some OPEC Plus members decided to cut their oil production voluntarily. They made this decision to help balance the amount of oil available and keep oil prices steady. And they agreed to keep reducing their oil production by 2.2 million barrels per day for the next quarter. Remember, this was the agreement for the previous quarter. And based on the meeting they had recently, they've extended this oil production cut into the next quarter, which is what many market participants have expected. Now, the decision was made to support oil prices because there are worries and concerns about oversupply of this commodity in the market, and because there are countries outside the OPEC Plus like the United States, the Canadian government, the Kuwait, and other countries who have pumped into the global market enough oil, which is giving a form of oversupply. So the OPEC Plus member are trying to balance things out, taking out the supply and reducing the supply by cutting oil production, which has a way of influencing more demand and increasing price of oil. And we've seen how the market had reacted to these decisions by the OPEC Plus members. Additionally, tensions in the Middle East are also helping to keep the oil prices up. There was an incident where a ship owned by the United Kingdom was attacked by the Yemeni Houthi militants in the Gulf of Aden, and this has made the situation in the area more unstable, hereby increasing the concerns for potential oil disruption from this particular area, and there is a risk of more conflict happening in that region. Then the issue of the Israel-Gaza situation is still there too, which has further escalating the geopolitical tension from that zone. So all of these factors, if you would ask me, is supporting the ascent of US oil prices. Now, with that being said here, we will be looking into the chart from a technical standpoint to understand the behavioral pattern of market participants using price action analysis. And then we're also going to be taking into consideration the fact that today is the first day of the week, and more or less, let's say the first couple of days of the month where we could be seeing some profit-taking activities happen too as well. So we will be taking all of this into consideration while we review the current market structure. So to start with, our first point of contact will be the daily time frame, so that we can have an holistic perspective into what is really going on a long-term perspective. Now, what we did on the daily time frame was to take into consideration the nature of price action since the month of July of last year. Now, the first thing that caught my attention is that key level had a $78.50 level, as you will see here. This zone has played a major role in determining the direction of price action in the last 7 to 8 months. Now, if you look at this closely, you will see how this area had been a strong demand zone for some time in the month of July/August, as you will see, and not until the month of November of last year that we finally saw the breakdown of that level. And since the breakdown happened in November, price action had continued to trade below the structure to further emphasize the strength of the sellers in this market, as you will see here. And not until last week trading session, we finally witnessed the breakout of that structure for the first time in the last 3 to 4 months. Now, you would agree with me that that is a very crucial juncture, hence we are going to be using it as our key level. And in addition to that fact is the reversal pattern, the potential reversal pattern we did identify in the last 1 month after noticing that despite the strong bearish momentum that started in the month of September, we saw at the beginning of the month of December something interesting happened here, as sellers found it difficult to continue that momentum, as we saw here that as soon as price tested the $68.70 zone, we begin to see rising momentum as price action continue to find a series of higher lows, giving us an ascending trend line to work with and a potential reversal pattern to guide trading decisions going forward. Now, once we identified this, we marked out the key level here as the neckline of that reversal pattern, where we needed that neckline to be broken to the upside to validate the potency of that reversal pattern. And as you will see, price action has finally broken out of the $78.50 level last week Friday. Now, the question going into the new week is, will this breakout turn out to be a valid one, or is it going to be a false breakout where price may likely drop back below the $78.50 level, triggering more sell positions to push price to the downside? Or are we going to be having price come back to retest the neckline in an attempt to continue the uptrend, or will there be an uptrend continuation pattern identified on the lower time frame to guide the uptrend continuation? Now, to help us position ourselves for the next move, we have a simple trading setup on the 4 hours time frame. Now, on the 4 hours time frame, what I did here was to look at how the market had behaved since the beginning of the month of February. And since the month of February began, it's quite clear that the market has been bullish. And to emphasize the strength of the buyers here, you will see that we have a couple of we have an ascending trend line after connecting the series of high and lows, and you know how we use our ascending trend lines. As long as price remains above the ascending trend line, we will be looking out for patterns and structures that supports the idea of buying. Now, zooming into what happened in the last 1 week, we saw this phenomenal breakout of the $78.50 level, as we saw price tested the highest point for this year at the $80.30 level. And since price tested the $80.30, we saw a retracement move, sort of a thing, price dropping into something like this. Now, the question here is, how far is this retracement phase going to go before another wave of bullish momentum will happen? Are we going to see a situation where it retraces back into the neckline to retest it in an attempt to continue the uptrend, or will it break it down into the ascending trend line, where we could be seeing a retest of the trend line to incite more opportunities? Or are we going to be seeing price just continue the momentum all the way, breaking out of the $80.30 level to maximize the potential of that uptrend move? So with this information we have gathered here, it's pertinent for us to try and see how market participants have been reacting to the structure since this week began. Now, to do that, the only way we can see how market participants have been reacting to this structure clearly is to scale down into the 1 hour time frame. Now, right here on the 1 hour time frame, you will see that since the week began, price action has been consolidating the profits it gained last week, and as a result you will see a situation where price is currently confined within the $79.80 level and the $79.25 area to emphasize the prevailing uncertainty in this market. Now, in addition to this range is this ascending trend line here, which we will be using to guide our trading decisions going forward, and as long as price remains above it, we will be buying this asset. Now, since we have a range which emphasizes the level of indecision going on here, we have no other choice than to exercise patience, waiting for either the breakout of the resistance line of that range to give us an opportunity to buy, or the breakdown of the support line of that range to give us an opportunity to sell. Now, with the way things are going right now, it's reasonable, considering the fact that we are within a temporary uptrend scenario, to place a buy stop order above the $79.80 level to capitalize on the uptrend if price action ever breaks out of that structure. And if it continues to climb new highs, then we will be looking at more opportunities at the breakout of the $80.30 level. So this is how we are going to be managing our bullish buyers on this asset. However, in as much as we are looking out for buying opportunities, you know how we do it in this community, we also want to keep tabs with the potentials the sellers also have in this market. Now, what are the conditions that we want to see here that will make us sell this asset and negate any bullish idea here? Well, first of all, it's important that we see price break down the support line here, taking out all the sell positions, all the buy positions there before jumping in. But one thing I would like to state here is that, considering the fact that price action still has been on a bullish momentum since last week, and the fact that it's trading above our key level situated at the $78.50 level, just right here, the pink one right here, it is very necessary that we wait for confirmations before we jump into the sell position. Now, what are the confirmations we want to look out for? We want to see price break down the support line first, then retest the structure, giving us a signal that buyers are finding it difficult to climb back above the structure, which would reflect on the chart as continued selling pressure to push price further to the downside. So this is what we will be looking out to sell. However, I'm beginning to see the potential of joining the bearish momentum even before the breakdown of that support line happens at the $79.25 level. And this is where this ascending trend line comes into play. Now, since we've already seen price break down this ascending trend line, are we going to see a retest of that trend line to incite a bearish signal? So let's exercise patience and allow this candle to close and see if it's going to come in the form of a retest. If it comes in the form of a retest and price finds it difficult to climb above the trend line, where the appearance of selling pressure below the structure on our lower time frame happens, then we can join the bearish move, then add more sell positions at the breakdown of the $79.25 level. So buying this asset today, we only want to see price climb above the $79.80 level to buy, and below the ascending trend line will welcome selling opportunities. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So this is my simple view on the US All Spots. So let's see how the market will play out in the next couple of hours, and I'm of the opinion that we should have a trigger as at that time. If you have any questions whatsoever as regards to the current setup, or you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. I can see a couple of comments here. I see you, Masio Trade. Good morning. Nasir, good morning to you. Malela, good morning to you too. And Malalela, I hope I pronounced that correctly. Says here that is GBPUSD going up. Well, we'll look at that in a moment, so stay tuned in so you don't miss out on that session. So we are going to be attending to the GBPUSD in a couple of more assets. All right. Panayo 621, good morning to you. Glad to have you around. That name reminds me of this Panoyo cartoon. I'm not sure if you've seen that cartoon. It's a beautiful name you have there. Thank you. All right, so in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. So the next asset, sorry. So the next asset on our watch list for today is the USTech100, popularly known as the Nasdaq. Is FB Kaita around? If you're around, please let us know. All right, so we are going to be taking another fresh look at this asset. Remember, we were able to capitalize on that bullish trend during the end of last week following the less than expected data from the manufacturing sector from the United States on Friday. And so the question as we head into the new week is whether this momentum will continue, or are there chances that we could be seeing some profit-taking activities happen, maybe giving some short-term trading opportunities. Now let's go into the details. So we are going to be starting our analysis from the daily time frame like we have done in the last couple of weeks. And the first thing I did here was to consider the nature of price action since the month of November of last year. That's an historical data of about 4 to 5 months. And what you will see here is quite interesting, as price action had consistently and uniformly found higher highs and higher lows. And if we connect these structures together, the higher lows, we have the support line of the ascending channel. And when we connect the series of higher highs, we have the resistant line of that ascending channel. So this old technical structure emphasizes the strength of the buyers in this market. Now, it's when we zoom into the current structure, we begin to see that price action is at an all-time high, as we saw it test the $18,340 level last week. And as soon as price tested, we begin to see some selling pressure resume around that area. And prior to testing of the 18,340, we saw price break out of this psychological level at the $18,000 area. I called it a psychological level due to the round figure of that price. Now, because it's a round figure, it's a psychological level, I want to be using it as our key level for this week. And you can see how that level had played a major role in guiding the character of price action in the last 3 weeks. As you will see, it was initially a barrier for buyers. As every point in time buyers tried to break through, it was met with a formidable resistance from the sellers, pushing price to the downside. And not until last week that we saw the breakout of the structure. Now, as we head into the new week, what are the chances that the uptrend will continue? Well, from a technical standpoint, whenever we see price action break out of a key structure like the $18,000 area, we expect at some point price may come back and retest the structure, which interestingly shares a confluence with the support line of that ascending channel to incite the trend continuation. Now, if we look at the distance between where price action is right now and that key level, we are looking at something up of over 300 pips, which makes quite a lot of sense to look out for if we are going to be selling this asset this week. And if the contrary happens, where price breaks out of the 18,340, then we will have no other choice than to join a bullish opportunity above the 18,340. So as it is right now, you would agree with me that we are at a crucial juncture in this market where price action has been oscillating around that all-time high at the 18,340 level. So how is price action, how is market participant going to react to this level this week? And for us to see this, we will have to scale down into the 1 hour time frame where we will begin to see things more clearly. Now, right here on the 1 hour time frame, I think I have a structure to share with you on the 4 hours time frame, which I would love us to mark out on our chart, and it has to do with this trend line after considering the character of price action since the beginning of this year. So I have this trend line intact after connecting the series of higher lows. Now, will price action come back to retest this trend line in an attempt to continue the uptrend, or will this trend line be broken to the downside to incite a sell-off all the way to the downside? So let's see how the market has been reacting to the 18,340. So scaling down into the 1 hour time frame, you will see, let me zoom in so that we can see things clearly here. So you will see here that since the new week has begun, price action has been consolidating, confined within the 18,340 and the $18,290 area to emphasize the prevailing uncertainty at this point in time. And for those of you who have been with me for a while, I usually emphasize how it is a common feature to see this kind of uncertainty happen whenever price action is within an all-time high. There is a tendency of fear to set in as those who had bought the assets, who had enjoyed the bullish momentum, out of fear, they might want to be closing in to take in some of the profits from the chart, and this usually reflect on the chart as consolidation phases, choppy market conditions, and retracement phase. And as you will see what has been going on since the week has begun, you can see the market is indecisive at this point. And usually whenever we find a range bound trading activity like this, we normally exercise patience to wait for a signal which may come in form of either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. So in fact, we are at a crucial juncture in the market right now where depending on how market participants react to this range will give us an idea of where to go. So at this point, it's reasonable to have a sell stop order below the $18,290 area to join the bearish move to the downside, and then have a buy stop order above the 18,330 to look out for buying opportunities. And in fact, if price goes ahead to break out of the 18,340, then we could be adding more buy positions to our existing trade. So this old range bound trading activity could either transition into a trend continuation pattern or a reversal pattern. So if it's a reversal pattern, we are looking at selling opportunities below the 18,290, and our TP target could be somewhere along the ascending trend line I showed you earlier, which could be dovetailing to a minimum of 160 pips. And if price goes ahead to break down the ascending trend line, we can be looking at a maximum TP at the $18,000 area, dovetailing to dovetailing to a minimum of 280 pips to catch here. So let's see how the market will play out. So we are looking at selling opportunities below the 18,290. Now a breakout of the resistance line will obviously welcome buy position. So let's see how the market will play out, and we will be back here tomorrow to review how well these assets have done, and of course prepare for tomorrow's trading session. If you have any questions regarding this current setup, or you need some further clarifications, feel free to let me know in the comment section. So I encourage us all to mark out this simple setup on the chart, as we will be needing them to guide our trading decisions going forward. So I will be taking the next 5-10 seconds off to see if there are any questions. Then we can go ahead to talk about the next assets on our watch list. So I encourage you to stay tuned in so you don't miss out on the next one. So I can see a couple of comments here. I see you, Dida T. Good morning. Glad to have you around today. I can see you, Flex. Nest57. Good morning. Flex is asking, what's the direction of gold today? Don't worry, we are going to be talking about gold in a moment, so stay tuned in so you don't miss out on that one. Okay, Flex. All right, so in the absence of no further questions, I want to assume that we are all on the same page on the USTech 100. So let's move on to the next asset on our watch list. Yes, next asset we are going to be looking at today is going to be the GBP USD. And last week we really did not gain any formidable traction throughout the course of the week, as trading activities was more of range bound to reveal the prevailing uncertainty in the market last week. And of course, we know what is happening. But during the later part of last week, Friday to be precise, we saw how the pound sterling rebounded, especially after the less than expected disappointing macroeconomic data from the United States, that is the manufacturing from the manufacturing sector, giving the pound sterling to rebound. Now, the pound sterling's gain in value in the last, especially in the last 2 days now, and stroke the Asian session, may be as a result or maybe supported by the hawkish remarks from the Bank of England's chief economist, who suggested that the first interest rate cut is not going to be coming anytime soon. And on the other side of the pond, the US dollar remains under pressure following that disappointing macroeconomic data from Friday, and of course less hawkish comment from Federal Reserve officials on that same day. Additionally, the recent risk-on sentiment in global equity market has further dampened the appeal for the US dollar, thereby providing some support to the GBP USD. Now, in light of this development, are we going to be focusing on an uptrend scenario here? And if there is any chance that the dollar will rise today, what are the factors we will be using to guide our decisions? So what I did on the pound sterling, the GBPUSD chart, was to run through the 4 hours time frame first of all, and this is where my analysis began for this week. And what I did here on the 4 hours time frame was to capture the nature of price action in the last 2 to 3 weeks. And of course, though price has been looking bullish since the second half of the month of February happened, and we can see a couple of ascending trend lines to buttress this bullish momentum, as you will see here. However, in the last 7 to 8 days, the market has been a little bit choppy, leading into a consolidation phase where price action is confined within the 1.267 and the 1.262 in the last 8 days in the market, to emphasize the prevailing uncertainty in this market. Now, if we are looking at things from a long-term perspective, it makes a lot of sense that we wait for price action to take out all the sell positions along the 1.267 to give us an opportunity to buy, while the breakdown of the demand zone between the 1.262 and the 1.26 area could welcome selling opportunities. However, if we look at the distance between where price action is right now and both structure, you will see that there is enough room that could make us capitalize on any trading opportunity, hereby making us to maximize the potential of that move. So what I did here was to mark out a key level that we will be using to guide our decisions for this week. And after looking at what has been going on here in the last couple of weeks, I have something at the 1.267. Now look at what has gone on around this area. You will see that this area has been a strong selling niche at some point. Look at what happened here. Though we had a little breakout, but it was still serving as a strong selling niche. Then we saw the breakout happen here a couple of weeks ago. We saw a retest of structure by pressure building up momentum around that area before that same level was finally broken again during last week's trading session. And since that moment, price action has been trading below that structure. And in fact, if price can break out of this 1.267, then we will be looking out for more buying opportunity so that we can maximize the bullish move. So we will have entered the bullish momentum early enough before the breakout of the 1.267 happens, after which we will be adding more positions, hereby having a minimum of 2 buy positions to maximize that move. And if I'm going to be selling this asset, I would rather want to see price action trading below this descending trend line, which was broken last week Friday, as you will see here. I would like price to trade below the descending trend line and in fact take out the 1.262 at least, retest of structure before jumping into a bearish move. So as you will see, selling at this point is not looking visible, as buying is looking more promising than selling this asset. Now let's scale down into the 1 hour time frame so we can see how the market participant have been reacting to this key level at the 1.267. Now to do this, we'll scale down into the 1 hour time frame where we begin to see things more clearly. And right here on the 1 hour time frame, the first thing I did was to map out an ascending trend line, which is going to be playing a major role in guiding our trading decisions for today. That is the first one here. Then remember, we saw the breakout of this descending trend line on the daily time frame, all of which is supporting a bullish momentum here. Now, in addition to these trend lines, we can see that the week started with a consolidation phase where price action was trapped and confined within the 1.26670 level and the 1.26520 area to emphasize the prevailing uncertainty in this market. And you know how we do it whenever we have a range bound trading activity. We exercise patience and wait for either price action breaking out of the resistance line of that range to give us an opportunity to buy, or the breakdown of the support line of that range to give us an opportunity to sell. Now, coupled with the fact that the various parameters we've identified on the chart and of course the fundamentals behind the scenes, it makes quite a lot of sense that we look out for structures and patterns that support the idea of buying. So what I did here this morning was to place my buy stop order above the 1.26670 level, and of course the key level for this week at the 1.267 to capitalize on that uptrend move. And for those of us who have been with me for a while, who do understand our analytical approach and you have taken advantage of this opportunity, well done and kudos to you. So I would advise that you move all stop losses to the first entry point, secure this position while we wait for new opportunities. However, if you are new with us on this one, well, it's okay. The week is still very early. Let's even see how far this momentum is going to go. So to project more trading opportunities today, I have a new level at the 1.26800 area, which happens to be the highest point price action has been for this week. And as you will see in the last 4 hours, we can see that sellers have continued to negate all attempts by the buyers to break through that area. Now, will this area turn out to be a formidable barrier for buyers? Maybe it becoming a selling niche that will push price to the downside, or are we going to be seeing a breakout of the structure? So if a breakout happens, I want to have a buy stop order above that area to capitalize on the uptrend move, as we shall continue to buy the GBPUSD all the way to the upside, where a further breakout of the 1.267 area will be welcoming more buy opportunities. So please mark out these levels accordingly, as we will be using them to guide our bullish buyers on this asset. Now, in as much as we are looking out for buying opportunities, we cannot ignore the potentials of sellers. And like I said earlier, talking about the fundamentals, where we saw we had of the hawkish remark from the Bank of England's chief economist, who has suggested that interest rate cut is not on the table at this point in time, giving a window for investors to place their bet on the pound sterling against the US dollar, which currently saw a disappointing macroeconomic data on Friday. However, we never can tell what could happen. The first day of the week will incite profit-taking activities leading into bearish momentum. But one thing I'm looking at from a technical standpoint is this as descending trend line that was broken on Friday. Now, in fact, if sellers come in this market, that is, if selling pressure persists below the 1.26800 area, leading to the breakdown of this ascending trend line and the key level at the 1.267, we may be seeing selling opportunities pushing price into the below the 1.26520 back into the structure before another wave of bullish momentum will happen. The old structure here is still looking very bullish for me, so in that regard I will not be joining any bearish momentum here at all. But if you are a scalper, a day trader, or a short-term trader, or let me say a counter trend trader willing to take advantage of short-term trading opportunities, well, you might be looking at selling the breakdown retest of both the ascending trend line and the 1.267, dovetailing to a minimum of 17 to 18 pips or a maximum of about 35 pips to catch on that one. So if you're that kind of trader, you might want to take advantage of that opportunity. But if you are someone who looks at a long-term view like me, then I would rather, if price drops below the 1.267, I would rather want to wait and see how the market will react to either the 1.26520 or the 1.26350 area, which lines up with the trend line, to see how the market will react to that area. Now, if we see reversal setups like double bottom structure, head and shoulder patterns, or falling wedge, we'll mark out the neckline of it and then buy the breakout of the neckline to join the uptrend continuation. But if price breaks down that descending trend line and we have a retest of structure with continued selling pressure, we might be in to join the bearish momentum. And for those who had capitalized on that move at the 1.267, you could be having another opportunity to add more sell positions to your existing trade. So this is my view on the GBPUSD. I still maintain a bullish bias, but we are not negating the possibilities of sellers dropping into any of the structures before the uptrend move happens. So mark out these levels and let's see how the market will play out going forward. If you have any questions, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds due to the shortage of time, so that we can take on the gold assets in a few seconds from now. So let's see if there are any questions, while you can also use that time to mark out these levels accordingly on your chart. Thank you. I see a bunch of comments here from Flex to Chris 40, Bob Carr, Elmio Somi, Bagwat, and Extreme 90. You guys are wonderful. Good morning to you. I can see Wari Sadar. Good morning to you too. Glad to have you around with us this morning. Trust you had a great weekend out there. So with that being said, here we shall be, and in the absence of no questions, of course, we shall be moving right into the final assets on our watch list for today. So the next asset on our watch list is my favorite. That is the XAUUSD, popularly known as the gold spot. And it was a phenomenal week for us last week. Remember, it was a very choppy start. We saw how the market was range bound most of the first half of last week, as we had we did not have any significant movement. Most of the times our positions were closed at break even, and in fact we had a couple of losses during the course of last week, before finally on the last trading day, when we saw the market react to the unexpected data from the manufacturing sector in the United States, giving us a negative figure, resulting in the gold responding positively in favor in reaction to that data, giving us over 600 pips from multiple buy entry on the last trading day of last week, giving us the privilege of recouping the loss we incurred during the week. And for those who capitalized on this opportunity, well done and kudos to you. So as the new week began, the price of gold has been range bound, as you will see here, consolidating between the $2,086 level and the $2,080 area to emphasize the prevailing uncertainty in this market. Currently, the US dollar strength remains compromised following that disappointing release of the US ISM survey on Friday and less hawkish remarks by the Federal Reserve official. Now, this weaker dollar stance acts as a supportive factor for gold prices, and with mounting expectations for a potential shift in the Federal Reserve's policy stance, the US dollar may find it challenging to gain significant momentum. Additionally, a subdued sentiment in the equity market further bolsters the appeal of gold, of safe haven assets such as the gold. However, we cannot ignore the effect the US Treasury bond yield could have on the US dollar, where a substantial rise in the US Treasury bond yield could restrain further upside potential for gold. Of course, we all know how the US Treasury bond yield is directly proportional to the price of the US dollar. If the US Treasury bond yield drops, the dollar also follows suit, and if it rises, this dollar also rises. And in the last couple of days, we've seen the US Treasury bond yield drop to about 1.5% for last week, closing last week about 4.1% in value. And as it is right now, market participants are likely going to wait for further guidance on the Fed's approach to interest rate adjustments, leading to an extended sideways trading activities ahead of the key US macroeconomic events scheduled for later in the week. So there is likely going to be a cautious stance which could limit the upside for gold. So we are going to be taking all of this into consideration while we review this current market structure. And also remember that the Fed chair is going to be having a semi-annual congressional testimony before the House of Congress on Wednesday and Thursday. This may also be a limiting factor for the upside of gold prices. So we might likely see, there is a high chance that we could see an extended sideways trading activity before a substantial move happen. So let's scale up into the daily time frame. Let's look at things from a technical standpoint and how we intend to position ourselves for the next move. So on the daily time frame, things are a little bit different for this week, as I had to go to as far back as the year 2020 to see how the market has reacted to that all-time high at the $2,080 area. And in fact, if you look at this closely, you will see that since 2020, this area had been a strong selling niche for our market participant here. So look at what happened here in the month of March of 2022. We saw what happened here in the month of May 2023. And in the last 3 to 4 months, we can see how that same area had continued to serve as a strong selling niche. Now, last week trading session, we saw how price action came back to close around that $2,080 level. Now, you would agree with me that we are at a crucial moment, and as a result of this, I'm going to be using the $2,080 level as a yardstick to guide our trading decisions for this week. And you know how we use our key level. I hope you still remember. If price trades above our key level, we look out for patterns and structures that support the idea of buying. And if we look at if price stays below the key level, we obviously will be looking out for selling opportunities. Now, if we go back into our previous structures, which we have been deliberating on in the last 2 months, it's obvious that the market has been bullish. And in fact, we have a transition into an ascending channel. See, connecting the series of higher highs, we have the resistance line. And when we connect the series of higher lows, we have the support line of that channel. Now, something interesting happened last week. Let me zoom in so we can see things clearly. We saw price action break out of this descending trend line for the first time this year. Remember, the price of gold has been consistently finding lower lows and lower highs since the beginning of the year, reflecting profit-taking activities from last year's bullish momentum. Now, last week's trading session, we saw the breakout of that descending trend line, hereby negating the idea that this trend line may no longer have the capacity to continue to negate the bullish attempt. Now, as it is right now, we have a couple of questions to ask here. Now, the first one is, following the breakout of this descending trend line, how are we going to see a situation since price is back into a strong selling niche at a $2,080 zone that may likely incite a bearish move, maybe back into retesting this descending trend line that was broken in anticipation of an uptrend continuation, or it could even drop to as far as the support line of this ascending channel to incite another wave of bullish momentum, or even break it down to incite a massive sell-off to the downside. And if we consider the distance between where price action is right now and that trend line, that's about over 500 pips minimum, and a maximum of about 700 pips to catch if price action ever drops back down into that descending trend line. And if price breaks out of this key level and continues, we are looking at a minimum of 650 that is testing the previous high in this market. So with this information we have here, you would agree that we are at a crucial juncture around the $2,080 zone, where depending on how market participants react to the structure this week will determine where price will be going. Now, to strategically position ourselves for the next move, I have a simple trading setup on the 4 hours time frame. Now, on the 4 hours time frame, what I did here was to consider the last 3 weeks, which of course you will see we have an ascending trend line here, and you will see how price action just broke out of that ascending or the resistant line of the ascending channel last week Friday. Now, zooming into the current structure, let me zoom in. You will see that since price tested that all-time high at the $2,088 level, we have seen price action consolidate its gains between that zone, between the $2,080 level and the $2,088 area. Now, this range here is more or less looking like an uptrend continuation pattern. We may call it a flag pattern or a bullish rectangular pattern, where it will be validated upon the breakout of the resistance line at the 2088 to incite an uptrend continuation. And in fact, this whole structure can also evolve into a reversal pattern, where the breakdown of our key level at the 2080 could bring price into this ascending trend line, maybe to retest it in an attempt to continue the uptrend, and that will be dovetailing to a minimum of about 100 pips to catch here if it comes into this trend line. And if it breaks it into the 2055, we are looking at about 230. And if it goes to as far as the ascending trend line we identify on the higher time frame, we're looking at over 300 pips. So we are at a very crucial juncture in the market right now, where depending on the direction of those breakout will give us an idea of where price will be going. Is it going up or is it going down? And like I did mention earlier, that the likelihood that market participants will be awaiting further guidance on the Federal Reserve's approach to interest rate adjustment could lead to an extended sideways trading activities ahead of the U.S. macroeconomic data event coming later in the week, and of course Jerome Powell's testification before the House of Congress later in the week. So we might see price keep on consolidating between this range before a final breakout happens. So we need to take that also into consideration. So let's see how the market has been behaving since the new week began. Now, looking at the structure here, The week started with a bearish note. As you will see, price started somewhere around here, around the 2086, dropping into the $2079.50 level. And in fact, we have a range bound trading activity where price action was initially confined within the $2086 level and the $2079.50 level, just within the boundaries of our key level at the $2080 area. And considering the fact that price action is trading above our key level, coupled with the fact that we have an uptrend, potential uptrend continuation pattern, it makes a lot of sense for us to position ourselves above the $2086 level to capitalize on the uptrend. And if price goes ahead to break out of the $2088 area, we will be adding more buy positions more buy positions on this one. So we maintain a bullish bias on this asset, hoping that price will continue to the upside. But if the contrary happens and price action breaks down the support line of that range, that is the $2080 area, a retest of structure should be confirming to us that price will be dropping to the downside. So it's a simple setup we have here, where our center of focus for today and for this week is going to be around the 2086 and the $2079.50 level, where depending on the direction of the breakout will be giving us an idea of where price is likely going, at least for the first half of this week. So we want to be on standby to capitalize on whatever opportunity the market presents to us. So in that regard, you want to be marking out these levels accordingly, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 5-10 seconds off to see if there are any questions before we go ahead and round off on today's technical analysis session. All right. So what do we have here? I can see Aris, good morning. Fath, good morning to you. Georgie2204, good morning. And oh, thank you, Flex. I'm really glad that you found these very useful. So we just have to wait for confirmations and then we jump into the position. So it's quite simple. I'm glad you found it simple as well. So it's on this note we have come to the end of today's technical analysis session. It has been a wonderful moment with you guys. I really appreciate your support in the comment section. And we were able to take on 4 financial assets on our watch list for this week, which includes the USOILSPOT, the USTech100, the GBPUSD, and of course my favorite asset, the XAUUSD, popularly known as the gold spot. And interesting enough, we were able to identify simple trading setups using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for today. So we strategically position ourselves for the next move. So I do hope you all marked out these levels as we illustrated during the course of the session. If you had done so, kudos to you and well done. So all we just need to do is exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you want to have a well-defined risk management strategy in place to ensure you mitigate against any risk on your portfolio. For those of you who joined us for the first time today, I do hope you are able to gain one or two things from what we discussed here today. If you did, you want to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information gathered here to enhance your own trading decisions. So it's on this note I wish us all the best of luck, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing and at the same time prepare ourselves for tomorrow's trading session. So do have a wonderful evening, everyone. Trade smart, trade consciously, and see you all tomorrow. Bye.